Today, we're going to unpack the deceptively simple yet incredibly powerful philosophy of Warren Buffett. And we're going way beyond just the surface level stock tips. We're going to get into the real foundational principles that shaped not just how he invests, but his whole way of thinking. So let's just dive right in.
You know, everything in Buffett's world really boils down to this one foundational idea, which he breaks down into two super simple rules. This is the bedrock of his entire philosophy. I know, it sounds kind of like a joke, right? But seriously, this is the absolute cornerstone of how he operates. It's not about avoiding all risk, not at all. It's about having this relentless focus on preserving your capital. The basic idea is, if you buy something for way less than it's actually worth, you've built in a margin of safety. Protecting what you have, well, that's the first crucial step to growing it.
Okay, so how do you actually avoid losing money? Well, Buffett argues it has a lot less to do with being a genius and, so much more to do with your personality. Let's break down what he means by that.
See, Buffett's point is you don't need some crazy high IQ or the ability to play three-dimensional chess in your head. What you really need is a stable personality. You need a temperament that can just totally resist getting swept up in the market's emotions, whether that's wild euphoria or absolute panic. And this quote from his mentor Ben Graham just nails it. It really gets to the heart of that independent temperament. Investing is not a popularity contest. You're not right because a huge crowd agrees with you. You're right because your facts and your reasoning are solid. And this, right here, is why Buffett famously lives and works in Omaha, Nebraska. He literally intentionally distances himself from all the constant noise and what he calls the overstimulation of Wall Street. He believes that with fewer people whispering in your ear, there's just less static in your thinking, and that leads to a much clearer intellectual process.
So, let's say you've got the right temperament. How do you put it into practice? Well, it all comes down to a really fundamental shift in how you see things.
This is the big question you have to ask yourself. A speculator is just focused on what a stock's price is going to do next week or next month. But an investor, in Buffett's world, is totally focused on how the underlying business is going to perform over the long term.
So here's the ultimate test. If you've bought a piece of a truly wonderful business at a fair price, it honestly shouldn't bother you one bit if the stock market just shut down for 5 years. Why? Because you own part of the business, not just some flickering price on a screen. If that thought makes you nervous, you might be thinking more like a speculator.
And this is how that process actually works. First, you totally ignore the stock price. You do the hard work to figure out what the business itself is really worth, its intrinsic value, and only after you've got that number in your head do you look at the price. This keeps the market from messing with your judgment and lets you spot those amazing moments when a great business is on sale for a ridiculously cheap price.
This next idea, this one is all about discipline and patience. And Buffett explains it using this just brilliant analogy from baseball.
Think about it. He says to picture yourself as a batter in a baseball game. In investing, the market can throw thousands of pitches at you, all these different companies at different prices, but the beautiful thing is you never ever have to swing. There are no called strikes.
You can literally stand there at the plate and just watch thousands of opportunities fly by. Nothing is forced on you. You don't have to swing at anything you don't understand, or at a price you don't absolutely love. Your one job is to wait, patiently, for that one perfect pitch right in your sweet spot, which Buffett calls your circle of competence. And only then do you swing for the fences.
So if it's that simple, why is it so hard for people to do? Well, there are two big reasons. First, let's be honest, patience can be really boring. And second, if you're a professional investor, you've got a whole crowd of clients in the stands yelling, "Swing, you bum!" There's this massive pressure to always be doing something. But the real secret to success often comes from just patiently doing nothing at all. So what's the big reward for all this patience and discipline? Well, it's about harnessing one of the most powerful forces in the entire universe.
What if I told you it was actually possible to earn a 50% annual return on your money? I know, it sounds completely unbelievable, but Buffett himself said he could do it.
Okay, now here's the catch. He said this was only possible when working with a smaller amount of money, like $1 million. And why is that? Because with less capital, you can go fishing in a pond full of tiny, overlooked companies. These incredible opportunities that are just too small for a giant fund like Berkshire Hathaway to even waste time on. That's a huge advantage for the small investor, and it totally disappears as the money gets bigger.
And this brings us to the real engine of wealth creation. Buffett's famous analogy is starting with a little snowball at the top of a really long hill. Your initial money is the snowball. The sticky snow it picks up along the way is compound interest. And that long hill, that's just time. The longer the hill, the more massive that snowball becomes.
So what makes sure you have a long hill? It's having a long and happy life. Seriously. Buffett deeply believes that being happy, doing what you love, and just letting go of all that negativity, it's not just good for your soul, it's actually good for your returns. It's a whole philosophy for life that, well, it pays dividends.
So, in the end, we're left with this question. Buffett's principles, they're not just about stocks. They're about compounding everything that matters in life: knowledge, relationships, goodwill. The real takeaway is to ask yourself, what's your snowball? What's that small, important thing you can start rolling today? And maybe more importantly, are you building a long enough hill to let it grow into something truly massive?